Monday, March 24th, market analysis, Stan Ehrlich. Good morning, almost 10 o'clock California time, a little bit past the middle of the trading day. And I do have something new after the futures section, but I always start out, as you know, with my indexes, and that's a very interesting situation this morning. Then the futures markets, and then stock SHEL. And I mentioned it a couple of days ago when it was at the high, and it has so far cooperated. So I'll keep tracking it for a little while. Um, E-mini and the other indexes, all, almost all, gapped up this morning or yesterday afternoon for the futures contracts when they started trading on Sunday afternoon, California time. All of them. That is very unusual and rare. Mostly because the futures contracts, of course, trade 23 hours a day. And during the regular week session, Monday through Friday, you don't have but 1 hour. And normally it doesn't gap up or down much during that time and reopens around unchanged. But this is what happened over the weekend. So every one of the charts now, 1 minute or 5 minute, I believe I'm showing you today, and the dailies are going to have a little rectangle here between the high of Friday and today's low so far. So here's our little gap this morning on the E-mini. We are near the high, but we're starting to sink a little bit, and we did get up to some resistance. Now, I indicated in the last several days that if we were going to have a strong push up, I would expect possibly toward this original breakout level of 58.60, we'll call it. But the resistance area is just a hair underneath that. And based on today's high, maybe that's it. That's all the rally we're going to get. But at the moment, I'm only looking for 58.60, which would be another, couple of days maybe of strength. I don't think because we were up 10 points. They were probably going to go up much more than that, maybe. But let's take a look at the 1 minute or 5 minute chart. And we're dropping off a little bit. It's a minor new low for a short period of time, not much. 8 o'clock, so for the last 2 hours. And that happened about 15 minutes ago. But we're still not going up much more, and we're starting to ease off a little bit again. I don't see anything major here in terms of any kind of a top. It would be a little bit more bearish if we could make some slight new lows. Currently up almost 9. So maybe if we go up 8, and then so it'll be 80 instead of 88, almost 90 higher. That'll probably put a little bit more weakness into it. But I really can't tell whether this is the highest rally high. So I'm able to justify a little bit more, but I can't justify too much more. I do think that my minimum downside objectives, which came close in some cases, this is not all that close, back to my E-mini. The low of the move again was on the 13th of this month, and it was fairly close to my minimum objective on the way down, 55.05. I've probably been saying 55 flat, but it could be just a few ticks above that. And we bounced off of support. So that was not unexpected. Oversold conditions support bounced 1, 2, 3 days, went sideways for a few days, mostly last week, most all of it, and then jumped up this morning. Again, banging against resistance. Sharp up day, left a gap behind. I do not expect this to be a breakaway gap that would be bullish. And then if I could justify that, I would definitely expect it to get up higher than what I just mentioned, which again is only going to be up to about 58.60. If so, back to the S&P, SPY. Pretty much the same story, but it's a much bigger gap. And it banged against the resistance line, an old support line, and it will almost reach that first resistance level, horizontal level, at 557.50 or 575. So If it's going to go up a little bit more, not much. Has it stopped going up already? Maybe. Can't come to the conclusion. But the gaps are almost always closed. I keep telling you that. And they're like a black hole in space. They tend to suck the price action back into the gap again. That implies we're going to come back to 564, 90-ish, and maybe this week, which would mean the high today could be it. Again, it's a tough one at the moment, but gaps are almost always closed. Here we go with a gap now on the 5-minute chart. SPY shows you just a little more detail. That's all. Now the QQQ gapped up above resistance in this case, going back up toward that resistance level at higher levels of 500. And that's the most I can justify here on the Qs. But having gapped up, I think we're going to come back to the Friday high, not the high of the week, just the high of Friday, because today's low is higher than the previous trading day's high, and that creates a gap. And on the 5-minute chart, you got a gap, of course. And it is above the highs of last week, also on the QQQ. So, yeah, just barely. All right, next chart. We got the NASDAQ gapped up, not above last week's highs, but above the high of Friday for today's low. Again, creating a bit of a gap. It banged into a resistance area. Should have pulled us to the right a little bit more. Stop that. Pulled it to right a little bit more, about like that. So we touched it, and pulling back slightly, 5-minute chart. There's not much of a dip here to make any judgment call about a top of any significance. Next, and there was that gap I outlined right there from Friday's high to the low of this morning so far. Now, here's the gap on the Dow, YM. Small, but it's there. New high ground for a week and a half or two. In the resistance area already last week, stopped, pulled back on Friday, but went through it a bit. And I talked about the YM getting there earlier than everything else. And if it could do what it's doing now, everything else might get to resistance while the YM goes up a bit more. So I'm not sure we're at a rally high yet. Next, just looking at the detail on YM, 5-minute chart. Next, we do not have a gap on the Russell. Again, it's a different animal. Sometimes I say the same thing about the YM relative to the Qs and the spider stuff. So maybe a little bit more strength, maybe not. But I am looking for another test of the lows we have seen in the last couple of weeks across the board. Next, coming off back to a minor support level, the high a couple of days ago. Yeah, I don't know. Can't figure this out very well at the moment. Bonds. Now, remember, we had a little double bottom way back here on November 5 and November 18th, which constituted the shoulder low, in my opinion, a little double bottom in its own right. The bottom of the market is a bullish engulfing ER buy signal. That's great. Love to see those things red and green at the tops and bottoms. And again, we had the bottom big time, October 23rd of 2023. So this dip that we're having is a little bit more than I was thinking. I was not expecting it, but it doesn't kill anything. We could have another little double bottom over here on the far right. It is a couple of days after I thought the timing was right. So that's my circle. I thought it would get it down to 115.11 approximately, I think I've been saying. And it was only one day early and a little bit higher. And then it went right up toward the tops. Now, it failed to break out, came off a little bit on Friday and another chunk today, already coming down to test a minor level of support over the last couple of weeks. But it could dribble off a little bit more. Oh, I'm going to have to say 115.31. Okay, call it 116. Give or take a few ticks, and then turn up. That would create my little double bottom here. That would be very symmetrical with the little double bottom for the first shoulder. You don't have that perfect symmetry very often, so it's questionable. But it would come back to my level of support if it got back all the way to 115.11 and only be a few days, a week late. then turn up. So are we simply not finished with developing the last shoulder, or is this whole thing a stupid idea? We're going to find out. 10-year notes are very similar commentary. The lows are not quite what they were the last couple of weeks, but minor support. We'll see if this pattern holds. And now we're looking at crude and energies. New high, not overbought yet. Elbow room on the upside easily. I think we're going to still get up to about 70-30-ish, maybe a hair less, 69.90. And maybe this bear trend line, which is probably going to be removed after this rally comes up and turns down, or tests it and turns down, or breaks it, something like that. But for the moment, it could very well be resistance. It got washed out pretty good back here. That's why I'm thinking it might not be relevant anymore. But overbought, no. New highs for about a month, maybe, or 3 weeks, yes. Upside momentum, yes. Like what I see, modestly friendly. Can't come to a longer term conclusion. I do like the fact that it got oversold bouncing off of support, though. That's good. So it's working. So I'm looking for a little higher. Same thing goes for heating oil. Pretty much the same commentary. Was in resistance, didn't stop it at all, really. And now it's hanging in there on a little bit of a dip from the high. Looking for a little bit higher, probably minimum 2.27. Next chart. Are we forming this head and shoulder top in natural gas? It did make what looks like the last shoulder high last week on the 19th, Wednesday, come down almost to the bearish engulfing, not quite, break the low neckline, closed below the neckline. Now that's supposed to be the breakout, closing below the neckline. Went basically sideways with a minor lower low on Friday. And today it is down a little bit more. I would love to see it get down below and close below today's low, which is the same as Friday. So that would be progress in the bearish direction. My minimum downside objective so far is call it a little under 3.0. Maybe take a week or two or three, probably. Do I expect it to get down to the bottom of support at 3.57 this week? I would say yes. Remember, we're supposed to have somewhere along the line, probably a few days after the breakout, which looks like it's in progress without any problems, and a rally back up, say 50% toward the neckline, or maybe all the way back up to the neckline, maybe this week. So there's supposed to be a bounce, but how far down is it going to go before it starts to bounce? Well, there's a previous low to worry about, 3.745. So 3.75. That looks real reasonable. Then bounce. Okay, next. Gold. Overbought. Dropped off sharply Friday. A little bit weaker again this morning. Inside day doji. I want to see it close below Friday's lows. Could happen yet today, hopefully the next day or two. Minimum expectation, 29.69, 29.68, something like that. I'll call it 29.70, easier to remember. Then we're dealing with possibly 28.80 and the possibility of 28.52. That's about the most bearish I can get at the moment. Next. Otherwise, it's a long-term uptrend. Silver. Maybe a very large head and shoulder top that could have topped out last week. Overbought conditions turned it down. But here we are at support. I didn't think the shoulder high was going to be quite that early. I thought it might be a little bit later, maybe late this week. And I lost my crosshair. I don't know where that goes sometimes. There we go. And yeah, the price is right, but the timing was a little too early. I thought the price was about right, but I thought it might be coming up still on the 28th of March. So I think that's Friday, 31st. Yeah, but middle of the week. All right. So I think there's a possibility of one more rally, but it could have happened already. Getting down below Friday's low and closing there, especially below the support area, would convince me a heck of a lot more that this is a large 10-month head and shoulder top where the last shoulder has just formed last week. And it's on its way down to the neckline, which could very well be the case. That's why I drew in my annotations and neckline. Neckline would be broken, let's call it a week or two from now, a little under 31. And the minimum downside objective for this is going to be in the ballpark of 23.7, a lot lower. Big bear move on silver if it develops properly. Every day I'll keep keeping you informed and keeping track of this. Next, platinum. Overbought, resistance area stopped at big break in progress. Not oversold yet. Comment about silver, also nowhere near oversold for silver. Platinum is getting closer quicker because of the size of this break and the support area. So 957 is going to get all of a sudden pretty close. I probably mentioned that support area, 2, 3, 4 days ago, just when it was getting overbought at resistance. So that would be my objective. And again, it's very close already. And I can't rule out 937 also. And the possibility of lower exists. I think we're going to get oversold when we get to this support area and then bounce. Next, copper. Currently overbought, hit its highest levels today and lower on the day right now. If perchance it could get below Friday's low, we would have a whopper of a bearish engulfing in overbought conditions, and that would make it red. Like that, and probably cause the beginning of a break that could be easily down to 4.9 and maybe all the way down to 4.6. Yep. That's if we have a bearish engulfing red sell signal. Meanwhile, new highs, overbought condition, currently trading lower on the day. This could be a regular type of overbought reversal. I think it stands a good chance of being a high day today. I haven't got a lot to go off of. It is relatively close to the old high, which of course is resistance. But I can't come to any particular conclusion that today's high is really great. Well, okay, I'm making a comment. Look at the highs here. There's 1, 2, and 2 lows out of 5, days, 6 days. There's a couple highs and a couple lows that are at this price, and guess what? It's matching almost exactly today's high. Yeah, a little resistance. All right. Turning down, I think. Next, soybeans, oil, meal, corn, wheat. I'm trying to justify long-term bottoms. This kind of price action is not yet helping much. We came down to some support. We held. At least the thing is not a lot lower on the day. It's down very little. And if it closes strong or has a bullish engulfing, I'll be happy. But it just doesn't look like it's got the strength to do it at the moment. We're just kind of dribbling around here. I hope it turns up. It might dribble off a little more. I'm looking at 997. But if you start getting lower than that, it's going to be damaging my longer-term bullish story. Soybean oil, a little lower on the day, minor new lows again for a couple of few days, and it broke a bullish engulfing on Thursday of last week that I had high hopes for. So that signal didn't work. It probably lost a little bit of money on the scalp, and the overnight is out somewhere with a small loss. Could have been offset on Friday. Certainly today, for sure. Well, looking for a rally, not really getting it. Major long-term support applies. Trend line's good. Nothing else is going bad. And just because it's a little lower and made a minor new low for a few days is not particularly bearish either, considering the bigger picture. Okay. Hope it turns around. Soybean meal's the same problem. Can't get its rear end in gear here. Down on the day, a couple of bucks. Yeah. In danger of breaking into new lows. New low closes. That would do some damage. Wouldn't like that very much. Got to turn around and start to get strong. I certainly expect it to be this week, but it's not behaving. Corn. Well, it got lower than the low of Thursday and Friday and turned back to slightly higher on the day at the moment. So, yeah, okay. But obviously, I wanted to get above last week's high on a closing basis, challenge resistance, and keep on going up. There is a large head and shoulder bottom developing potentially in corn. Also, so the first shoulder is a bullish engulfing ER buy signal on February 26th of 2024, last year. Then we got down to the bottom of the market, and that was on August 26th and 27th, the exact same low price for 2 days in a row. Unfortunately, not a bullish engulfing and a no buy signal at the very bottom, but it was the head of a head and shoulder bottom that was a medium sized version. It broke the neckline. It went up to its minimum objective. It had no problem whatsoever. The original breakout was about December 26th. I know I track this every single day. And it finally got to its objective on the upside on January 29th. Went a little further, stopped, came down to make its last shoulder on the bigger formation, which is now a little over a year in size. So all we have to do now is stop fiddling around sideways, start to make new highs. The last shoulder is good. Timing's all right. Price level's all right. All the body parts are there. Let's see what happens with this big head and shoulder bottom in corn. Maybe. Got a ways to go to break out. And then the upside objective is 632. It's at 465 at the moment. Next chart. Minor new lows, not holding very well, breaking a little support in wheat. Just got to start to hold. Otherwise, the darn thing could fall apart. And my whole long-term bullish story has to go on the wayside. And I'll have to flip to being probably short-term bearish, mostly across the grains, but not yet. Cattle had a bearish engulfing on Friday. I believe it happened late in the day and after my YouTube, so I didn't see this at the time that I did my YouTube. I don't think so. But now that it happened late after my YouTube, it's there, and we are currently trading slightly higher on the day, but an earlier rally has failed around the high of Thursday and around some resistance, a little bit above it. But I'm seeing evidence here since it came all the way back down to almost its lows and almost the low of, or maybe even a little bit below the low of Friday. I'd like to see it close on its low so far or making new lows. And then I'm thinking the signal is going to be good. And so far it is good. And it allowed for an ER3 short also. So one overnight should still be there. And we probably have a very minor loss on the ER1 overnight at the moment. But I like the way it's acting in general. Bearish, looking for a move down to probably 190 and maybe even lower. There is some support around 196. Next. Hogs. I don't know. Rock in a hard spot. Could break the support. If it starts to close below 84.95, then we probably will drop all the way down to 81 and a quarter. That looks like it's trying to happen. No comment. Let's see what goes on the next day or two, or by the close. And this is Shell, SHEL, stock. The reason why I have this chart, and you remember XYZ, I was tracking that earlier. It was called, I think, SIG. But the reason I'm tracking this now is somebody requested it, and I was very enamored with the way it was acting on Thursday. I don't get a chance to talk about what I nickname a bass backwards, and that's backwards from ass backwards, of course. These don't happen very often. And this was such a great combination, and it's working so far. Not great, but okay. Mostly because of the break on Friday. Thursday, it made a higher high for the trend up. It gapped up on Wednesday, leaving a small gap behind. Let me rescale this and even do it more. Okay, so now on Friday, the gap up on Thursday was closed, but Thursday's the key here. Thursday it also had a low lower than Wednesday's low. So it had a bear at one point. It had a bearish engulfing, but at the end of the day, it was a bullish engulfing. But the problem is it was way overbought, and on purpose threw a circle around this 91 RSI. On daily data charts, that's very unusual. Normally, it doesn't get to 90, maybe the 80s, but this got to 91. So we have an outside trading range, normally bullish, outside up day, bullish engulfing, but I've coined this bass backwards because of the overbought condition. I have the extra, and I commented about it, potential exhaustion gap I mentioned. Now there's another gap all the way down to 86.80. That one I think is going to get closed. It may take a week or two. But one problem on the way down is we're just bumping, and it did it on Friday, against some support. So getting below Friday's low on a closing basis also will not only get into the support area, which is kind of like a no man's land. It could bottom out anywhere in there. But the gap down here says we're going to come down and close the gap because gaps are almost always closed. That's the story. E-mini hanging in there at the moment. Don't see any collapsing 5 minute made a new low here type of activity. Quickly changed to 1 minute. And here we are. Nope, I just can't come to the conclusion. I don't see any kind of a top. It could bottom out at any point. I'd have to get all the way down below 57.76 in order to come up with any terribly bearish commentary. And that's still significantly higher on the day. So that would be the beginning of some bearish action. And that's a ways down already. So, yeah. You guys have a great Monday and profitable trading to you.